Okay, for today, we're indicating that we're opening at, see if I'm missing anything. Hey, JD, good morning. Gotcha, buddy. Sorry. There you are. Okay, so for today's trade plan, right? First of all, let's look at where we're at in the bigger picture. Let's move this a little bit. And for that, we'll jump over to the volume profile to understand where we're at. Okay, so first, look at this. No damage has occurred, right? This is where we had the last gap up right here. Last significant gap was right here in 1953, right? If you look, the 50-60 retrace from that gap was right into yesterday's low. Okay, we came right into the 50 and we closed right at the 50 retrace. A market that's strong and trending to the upside will tend to hold its 50-60 retrace. Now, it doesn't mean that it can't dip below. It just means that it will tend, it can dip below and still continue up. But if it doesn't, that lends even more credence to how strong we are to the upside. So today, first clue, first thing I want to know, can we get below yesterday's low? And specifically, can we get below and hold below 1977? I would treat this based on how we close and where we're opening. 1995, 1984, 1974 would be 20 points down, right? And I would suspect starting at that 1974 that if we get back above this 1984, that would create a trap point and push us back to the upside. Clearly, that's resistance right now. Now, there's an open gap that was not closed at 2015 and a quarter. I'm pretty sure we'll blow right through that. We've come close to testing it 3 times. I'm actually going to consider that tested, which is why it's not on the charts. It's simply not enough of a rotation from a break. And even if it does break, if that open gap holds, it'll trap back underneath and create a trap underneath that 2012, 2014 area. And so we don't need to take the risk of shorting straight into that open gap, especially since it's pretty much been tested. We came within two ticks. And I do not want to take added risk at a point where it's almost been tested on 3 separate occasions, both overnight and during the RTH. Okay, so the other thing that we're looking at is the uptrend is still solidly intact, right? The uptrend that started from this swing low late last month, we're nowhere close to breaking that, right? In order to get a real downside move, see if I can manipulate this. Maybe I can't, so everyone can see this properly. Right? In order to get a real downside move, you've got to be able to at least, I'm not a trend line trader, but I'm not stupid. You've at least got to be able to get below the trend line, right? The trend is solidly up. Additionally, if we'll look back at history when markets have reversed, I'm not saying this is a bottom. I'm not saying we're not going back down. What I'm saying is we haven't been able to get past the 50-60 retrace from this gap over here. And traditionally, when we go back to periods where the market has broke back to the upside, I'm going to give you a look at that, right? So this was the last time we had a significant down. This is October of last year, right? You'll see we had a significant downside. The market looked terrible, and everyone thought, oh, well, this is the beginning of a significant downside correction. You'll see that we had a series of gaps in here, right? There was a gap here, another gap here, and a trend line got started, and a very basic trend line at that. So from here to here. Okay, this trend line had to get broken before we saw any downside. And if you'll notice, what did the market do? As long as we stayed above that trend line, the market kept grinding higher. And even once we got past that trend line, it wasn't until we got past it, consolidated, that we got any kind of substantial move down. Now, we did, if you'll look carefully, we did have some down days within this. But what you'll notice is what the market would do is move up, consolidate, we'd end up with a downside day, we'd gap the next day, kind of sort of like we're doing today, right? Go through 3 days of consolidation, mostly sideways trading, gap again, sideways trading, gap again, sideways trading. And notice throughout all of this, we had no significant gap to the downside, right? Until we get to this day here. This is the first day we have a gap to the downside, and even here they weren't ready to break the momentum. They still gave one more push to the upside. This is kind of sort of the beginning of the first, 3 weeks of correction phase, right? And that was accompanied by a gap lower, not a gap higher, right? Additionally, what happens is psychologically when we're in this period of time, everyone goes, okay, if we're rolling back up, they'll look at something like this and they'll go, okay, swing high, swing low. We're already had a 50-60 retrace, and what non-professional traders do is they look and they go, well, this has to come back and get retested, right? We have to retest the low. We have to come back for a 50% retrace. Something has to happen. And what you can see is they consistently, right in here, you see that they make attempts to consistently push down, but they can never gain traction. And so what happens to traders here is you get this bearish mindset and you go, there's no way we can keep grinding up. And that's exactly what it does. And I can show you hundreds of examples of this going all the way back to 2000, where the move has already happened to the downside. It was for a brief period of time and it's over. And your best trades and your best look, okay, what this is generally punctuated by is quick rotations down, brutal, scary, right? But then at the end of the day, grinds back up to the upside. Notice that there's almost no closes on the lows through this entire period of time. And I don't have the time to do it right now, but if we went through it over and over, we would see that be consistent. So for today, right, we're opening at roughly 1994. I would actually expect some strength right out of that 1991 to 1989 right out of the gate, likely to be tested in the first half hour. If taking a stop in the first 30 minutes ruins your day, and it does for a lot of people, skip it. It's not necessary. It's very aggressive. The danger of the first half hour is you can get caught in open drive higher, open drive lower. I won't call a trade in the first half hour. I am confident that the zone is placed in the right location. First test of Wednesday's low, I would expect a response back up from there as well, back to the upside. What are we looking for in the first 30 minutes? Open drive higher, open drive lower. What does that look like? Very easy. Well, it's not that, but it's this. 3 consecutive bars up like this, or 3 consecutive bars down right out of the gate. That's textbook open drive higher, open drive lower. That's at a minimum what you should be looking for. It doesn't mean that's the only way we can open drive higher, open drive lower. That is just textbook 1, 2, 3. We've got it. Open drive higher, open drive lower. The easiest way to handle that is to go, okay, I'm going to simply skip the first hour. And you'll notice after the first hour, even in here, yes, did we keep driving and might have you taken a stop? Yeah, but notice the zones start to work, right? We spend over 20 minutes in this. Well, we don't know. I don't know what the zone was at that point, but you can see we consolidate sideways for over an hour. We get up to the next area of rotation, we consolidate sideways. It stops, for the most part, driving relentlessly in one direction. That's why if you, uh-oh, yeah, I can. Hold on a second, buddy. So people apparently are having problems getting into the meeting. I'll send the meeting to everybody. Hold on a second here. Is Twitter down across the board, Ron? Is anyone else having problems with Twitter? Okay. Maybe it's just on your end, Ron, but either way, there's the link. So, open drive higher, open drive lower, first thing I'm concerned about. Next, economic data. Anything to run in front of us? It's Thursday, there probably is. Let's go look real quick. Not that it matters, but thanks, Ralph. I appreciate it. So today is Thursday. We have Philly Fed manufacturing at the top of the hour. And FOMC Dudley, member Dudley speaks at 9:30. Please be aware. Federal budget balance at 2:30. That's half an hour before the close. Why they'd release it then is beyond me, but whatever. And that's that. I imagine the Philly Fed manufacturing index is going to be the biggest thing on the. Okay, great. Ian, no, I'm not right. Well, yes, I am actually. I'll take that back. If I get tick divergence or I have 5 minute divergence into the zone, I'll sit in the zone and wait. I'll take the risk there, especially on. Ian had asked, he goes, a lot of the zones are working, but they're taking more than 20 minutes. And my response to that is, yeah, I am making provisions for that, which is if I have 5 minute divergence or I have tick divergence into the zone, I'll wait longer than the 20 minutes I usually wait. Um, that's the adjustment I'm making, Ian. I don't have a better way. I don't have a better way of doing it than that. So that's what I'm doing. So specifically, the zones that I'm looking at for today. Okay, above, first time into this. Wow, this is really annoying me here. Let's see if I can get this on here real quick. There we go. First time to this. Oh, I don't know why it's giving me such a hard time. I will get it fixed. There we go. Okay. First time to this 0750, 0950. I expect rejection out of this area. This is Wednesday's high, Globex high, but I do not have it marked as a strong zone. It still, I would expect rejection out of it, but not necessarily strong rejection out of there. I don't want to change the colors on this. Just there's no significance to the color, guys. Just to distinguish one for the other. Okay, and then above 2019 to 2021, I expect strong resistance out of there, and that's about as big a stretch as I expect. If we even get up to this level, that's almost a 40-point stretch from yesterday's close. We're much more likely to exhaust this 07 to 09 area and consolidate right in here. That's my 2 cents about that. On the downside, I expect first test into this 91.89 area to get a responsive buy. It's aggressive so early in the day, hence no S. If we get below Wednesday's low, which was well tested multiple times yesterday, first area I expect response is 75 and 3/4 to 73 and 3/4. There is a support resistance zone in between here. I'm going to go lay it out. I just don't. We could get a response out of it. I just felt like the way that the area had traded, that it's vulnerable to breaking, and that 75 was better, but basically right about 79 1/4. And what I would do is make it basically 80 to 79 would be the support resistance zone I would choose on that. And I simply did not like it for two reasons there. Sometimes you have to choose your poison when building the zones. 79 3/4 to 78 75. Okay, I would expect response back up. Obviously, the market's responded from that area before, but I wanted to leave some room for a stretch in between, particularly considering how far the market's been stretching on 10-point rotation. So if you want that support resistance zone there, you're welcome to put it in. I did not want to trade that area. It just looked too iffy to me. So I've completely taken it out. 75 3/4, 73 3/4, and then on the downside, based on where we're opening of 94, this would be a roughly 34-point stretch. So out of both of these trade locations, I am looking to get long out of both those zones before we push back to the upside. Additionally, I'm just simply looking for tick divergence in key areas, and then our normal swing long, swing short, and we'll be identifying those zones as the day goes on. Other than that, that's a trade plan. Does anyone have any questions about that? 204.50. It's still an area of interest. Um, I wanted to give it room. Here's my reluctance, Bill, and why I don't have a zone there. Okay, look at the price action above 204.50. All right, so you can still say it's poorly auctioned above. See that? That's about 204.50 sitting. But look at 204.50 from a. So yes, 204.50 is still an area of interest, but when you take a big chart for this area and you throw it up at 204.50. Okay, Look at it as a whole. Look how many times we've traded through 204.50 on both sides of that range. That's what's keeping me from putting a zone there at 204.50 is that, yeah, this time it worked, this time it didn't, this time it didn't, was, roll down 2 points against you. This time it blasted through you, this time it worked, this time it blasted through both sides. So I'm pretty leery of trading there at this point. If it works, that's great. If it doesn't, but remember, my entire objective is to make sure I have a very, very high odds of getting paid. If a zone works, but there's only a 60% odds of it working, well then what do I care, right? So 204.50 is the support resistance area, but we've traded through it too much at this point for me. And I will need to see, if I was going to trade there, tick divergence, right? And or 5-minute divergence. So anyways, that's it. We are open now. And this recording. Everyone have a good day. One last note to everyone. I have 2 or 3 guys that I'm coaching one-on-one that struggled the last 2 days. It's always an option to reduce size, right? Take a breath and change your process to a process-focused goal, not a how much money have I made goal. All you want is 1 or 2 trades, profitable trades, get yourself stabilized. You cut back to trade size to reduce the pressure. And when you have those 1 or 2 trades, walk away. Get back to you being used to being a winner, right? And then carry your momentum forward from there. And that goes out to everybody. So anyways, that's it, guys. Follow your trade plan, most importantly. Um,